welcome to my YouTube channel. We're offering lessons in accounts and in commerce. So today we'll be doing an accounts question. Mostly the things that come in accounts, that the key concepts is what we're going to be breaking down here at this YouTube channel. So our topic for today will be looking at the manufacturing account. So we'll understand the manufacturing account and key concepts that is required for one to know in order for the manufacturing account, for the balance sheet for the manufacturing account to actually balance. So what is a manufacturing account? A manufacturing account is simply an account where a business will calculate the production cost, or simply the cost of production. And what needs to come in one's mind, we're not overgeneralizing concepts here. Let's get, for example, Agape Private Limited Company is a company that sells laptops. So Agape Private Limited Company actually makes its own laptops. So the cost of making those laptops is what we call production cost. So is what we're going to be looking at today. In this 2019 question paper, Principles of Accounts, the question was like this. This is how the question came. It says, J. Katwishi is a manufacturer of children's toys, and the following balances were extracted from his books of accounts on 31st December 2017. So they simply lay out things that we need to follow in order to write up a manufacturing account. So one of the things that we need to put into consideration for a manufacturing account to balance is that we need to find that production cost. So it's simply, in accounts, what you really need to know is the trading profit and loss and the balance sheet. So when you get hold of this concept, this is the same concept that will follow in the partnership account, in non-profit-making organization, incomplete records, and even the manufacturing account itself. So firstly, you need to write the manufacturing account. This is what we're going to do here. We're going to prepare the manufacturing account. Then from a manufacturing account, we're going to get that production cost. Then from the production cost, we're going to use that production cost to calculate the net profit or net loss for this company. And then from there, now we're going to balance off the account. We'll see if our calculations were actually done correctly. So key concepts will be laid down during this lecture. So this question, the transaction or the balances that were given, saying motor vehicle expenses, electricity. So electricity was both for the factory and the office. Then we have royalties. So royalties are simply, let's say, a trademark, to say some sort of procedure that a business follows in order to produce some certain good, and this is simply rented out to actually pay to use this procedure. So let's say maybe Bustar's company is the one that created this procedure of manufacturing a laptop, then I, Agape Private Limited Company, will simply rent out that procedure or borrow or buy that procedure and use it in my own. So money will be actually paid for this. This is what they call royalties. Then from there we have factory wages, sundry expenses. Sundry expenses actually for factory and for office, advertising, purchase of raw materials, rent and rates. Rent and rates was also for factory and for office. Then we have plant and machinery, we have office equipment, we have office salaries, we have accounts receivable, accounts payable, cash at bank, sales, motor vehicle at cost, inventory on 31st December 2016, finished goods, that was that, raw materials, it was that, drawings and capital. Then additional information. So mostly always when you are tackling any question that comes to section B, where you have to pick between one, you need to really pay attention to the adjustments, because the adjustments is what will determine if your account will balance or not. So these adjustments, we're going to look at them, how you actually deal with these adjustments to our final accounts. So adjustments, we have inventory. This is a closing stock. We have for raw materials and for finished goods. Then depreciation is to be charged as follows. Machine. So here they calculated everything for us. There is no calculating straight line or calculating reducing balance method or diminishing balance method. Everything has been done for us. Then royalties unpaid. So knowing that royalties is here and royalties will be entered in the manufacturing account, we need to pay attention to this one. So royalties unpaid. So unpaid is simply, I know maybe you've been exposed to a different term. Maybe they used it as accrued or owing. So they simply mean the same. Unpaid, accrued or owing means the same, meaning this thing was not paid for, so it's simply outstanding. Then we also have rent office, so the rent for the office, not for the factory, because there's rent for the factory and there's also rent for the office. So for the office we have rent which was unpaid, a 70 kwacha. Then now the question is, you are required to prepare the manufacturing account for the year ending 31st December 2017. So the manufacturing account. What you need to know in the manufacturing account, or some sort of hint to say, is that here there is no much of, let me say, subtracting. Most will be adding to calculate our production cost. So there are certain things that we must enter from here. So everything to do with the factory or the manufacturing account is, we're going to look at anything that deals with producing a certain good is what we're going to enter in this manufacturing account. So in this manufacturing account, what we start with, always here we don't start with sales, because how can you start with sales? You're trying to produce a good. You don't start with sales of that good. You start with the opening stock. So we're going to enter everything has been already entered here. So I'm simply just going to enter our opening stock. Our opening, sorry, so we're going to enter our opening stock or inventory. So opening stock for this is actually raw materials. So here we enter raw materials, not finished goods. So we're going to enter our raw materials. How much was it? So the amount for raw materials was this was 20,650. So it was 20,650. Then from there, it's simply more like you're calculating for the trading account. So from opening stock, you know that you go to purchases. So here we're mainly looking at purchases for the factory. So we're going to look at purchases for the factory, which was purchase of raw materials. This is the one that we're going to enter. So we're going to enter purchases. We're simply talking about raw materials, not any other, not finished goods, but raw materials, because we're trying to produce this good. So raw materials, how much was it? So the purchases figure was 28,608. 05, sorry, 05. That was the figure. Then from there, we are going to add this. So when we add this, what are we getting? This is 20,650. When you add 20,650 plus 28,605, 28,605, what are we getting? We're getting 49. So this 49, we're going to write it down here. We're going to write our 49,255 kwacha. Then when we found this, now we're going to say, okay, this you all know that this is our total stock available. So this is total stock available. Then from there now we're going to less. So here it's simply more like you're calculating the trading, but the things that you're entering here is simply raw materials. Then from the total stock available, now we're going to say less closing stock. Less closing stock. And which stock are we talking about? Again, we're simply just talking about raw materials, not finished goods. I repeat, not finished goods, not work in progress. No, but raw materials. So the closing stock for this was provided here. So closing stock or closing inventory for raw materials was 7,250. It was 7,250. Yes, 7,255 actually. 7,255. Then what are going to less this? So when we less, what are we getting? Simply subtract. So answer, we're going to subtract 7,255. Sorry, 49,255 minus 7,255. 255. We're getting a clean 49,000. So we record our 42,000. We're not going to take it. We're not going to take it here. No, we're going to continue on the middle column. There, we're going to take it that side when we bring in our direct expenses or direct manufacturing cost. Then here we're going to. What did we get? We said we got 42,000. 42,000. This we all know that this is our cost. Now here there are certain terms. We don't say cost of sales or cost of goods sold. No, we say cost of raw materials consumed, because we use them, so they are consumed. Cost of raw materials consumed is the name for this figure that we found after less in the closing stock. Then now from there, after we found, so this is some sort of, we can say it's when you're looking from the trading that side, we can say, okay, this is some sort of trading that we've done. But here we've just brought in the raw materials which are already available, then with the raw materials that we've brought in, and less the closing stock of the same raw materials. That's our cost of raw materials that was consumed. Then from there now, here we're going to say add direct costs. So there are direct costs and there are also indirect costs. So direct costs in the manufacturing account, these are simply costs that can be traced directly where they were done from. Like, let's say, wages, the people who are in direct contact in the production of this good. So here we're going to look at our direct costs. What can we trace directly to the production of our goods? What are we even producing? This guy is responsible for toys. I said he produces toys. So from there, we're going to go to for our direct costs here. Then looking for a direct cost, you start from the top so that you don't miss any. So our direct cost, electricity is not direct because here they've brought factory, but electricity is not direct. Then royalties, is royalties direct? Yes, royalties is actually direct. It can be linked to the direct manufacturing of this product. So royalties will be included. But when recording royalties, remember, on our adjustments, we mentioned something about royalties. We said royalties unpaid. So meaning when something is unpaid, I think something will be dropped concerning when we say something is unpaid and something has been paid in advance. So when it is unpaid, we're going to add it because it has accrued. It is owing. We are expected to pay for it. So it is owing. We're going to include it. So we're going to add it to royalties. So we're going to get our royalties figure. We're going to mention, okay, royalties. How much was our royalties? So our royalties, we're not going to put it on the middle column, but we're going to bring it here. So it's supposed to be an O. It's supposed to be an O. Royalties. Royalties. So we're not going to take it in the middle column because there's an adjustment concerning royalties. So when we say something it is unpaid, meaning it has accrued. It's awaiting for us to actually pay as a business. So we're going to bring it here. How much was the royalties figure? So the royalties figure was from here. The royalties figure was 6,050 kwacha. So we're going to write 6,050 kwacha, like so. Then we're going to say add accrued, add unpaid or accrued or owing, add and paid. So when something is owing, we add. Then when it is paid in advance or prepaid, we less. Same concept concerning adjustments to final accounts. So we're going to add our unpaid. So how much was unpaid? So the amount which was unpaid was going to get the amount which is here. The amount which was unpaid was 2,750. So we're going to get our 2,750. 275 kwacha. Then we're going to add, simply add. because it's own. Then when we add, what are we getting? We add 650 plus 275. What are we getting? We're getting 6,325 kwacha. Then now that's when we're going to bring it here. So we're going to bring our figure now here, the one that we've added, which is 6,325, like so. Then we're going to continue looking for more direct costs, the ones that we can link, you can trace directly to the production of these toys that J Katwishi is actually producing. Then we're going to go back in search for, we're going to go back in search of more direct. So more here, we're going to, okay, more direct costs. We go again to the top, then royalties, factory wages. This can be directly put, this can be traced. So we're going to get our factory wages, which is 30,000. Is there any adjustment concerning factory wages? No, there isn't. So we're going to say factory wages. So there's nothing attached to it. There's no adjustment concerning factory wages. We're going to enter the figure. So how much was the figure for factory wages? The figure for factory wages was 30,000. So we're going to enter our 30,000 cleanly in the middle column here. 30,000. Then we're going to proceed. Do we have any other cost here? So when we look at our question, there isn't. That was our last direct cost. So we're going to add this. Simply, the issue of adding in this account, don't stress yourself overthinking and everything. No, just look for a direct cost and your indirect cost. That is it. Then you're on the right track to actually balancing your manufacturing account. And another thing is that these adjustments, I think a separate video will be done concerning adjustments to final accounts. What you need to do when you're given an accrued, when you're given an owing, when you're given a prepaid, because these are the things that actually causes our accounts not to balance when we try and do it, because some adjustments are tricky and some it's just a simple because this is principle of account, so there are certain principles concerning certain adjustments. So a separate video will be dropped, so subscribe to the channel and like, so when we post a video concerning those adjustments and other topics related to commerce and accounts, you get notified so you're not left behind. So here 30,000 was the last direct cost that we had, so we're going to add, just add everything. So we're going to add this. So 6,000, this one is already here, so we're going to enter another one, which is 30,000 plus now the 42,000, the one that we calculated per member, the cost of raw materials consumed. We're getting 78,325. So we're simply going to do this on this side. Now so this is what you need to know. When you add your direct cost, when you do your calculations with the cost of raw materials consumed, that's why you take it this side. Then it has a special name. So we're going to enter our 78,325 there. So that is, this figure is called the prime cost. So that's our prime cost. So that's our prime cost, 78,325. That's our prime cost. So prime cost is simply the figure of the direct cost added together with the cost of raw materials consumed. But again, you can find your direct cost even if you have one direct. You can find your prime cost, sorry, if you only have one direct cost and you have your cost of raw materials consumed. So that's the prime cost. Now, in this account, like we mentioned, we're trying to find the cost of production. So this that we found is just the prime, the beginning. Now we need to find our indirect cost, so we add them to this. And that's all. And sometimes you might have work in progress. So work in progress, simply goods that they haven't been completed. You haven't finished producing them. They are incomplete produced goods. That's work in progress. So here now, from here, we're going to go to our we're going to bring about now the issue of add indirect costs. So indirect costs in our question, so indirect costs are simply, we are unable to trace them, but they are available. They are concerned with the manufacturing of the goods, but they are linked indirectly. That's indirect cost. So we're going to look for indirect cost in this question. So starting from the top, always start from the top, because when you start from somewhere on the middle, maybe you saw something, you might miss other direct or indirect costs when you're perusing through the question, trying to find what to enter and what not to enter in this manufacturing account. So from here, we'll start from the top. Motor vehicle expenses. This is for office, because there is the office part and there is also the factory part. So this one is for the office. We're going to enter it in our trading profit and loss account. And then we have electricity. Here they've even specified, said electricity for the factory was that. Then rent for the electricity for the office was that. So here we're only concerned with the factory. So we're going to enter everything that is concerned with the factory. Now remember, we said there are adjustments here. Always pay attention before you enter something to avoid dating in your work. You simply look to the adjustments, and before you enter, you see if that item that you're trying to enter has any adjustments attached to it. So if it doesn't, you enter it directly. So adjustments here will only have royalties and office rent. That's all. So we're going to go and get our electricity for the factory. So how much was electricity for the factory? This was 3,610. So simply underline this. Then we're going to enter our electricity. So how much was the figure for electricity? So the figure for electricity was 3,000. It was 3,610. Yes, it was 3,610. No adjustment attached to it. That's why we've entered directly. Then we're going to proceed. What else did we have here? So we've entered that. So sundry expense. There's also factory and office. So we're only concerned with the factory. So we're going to go factory. How much was it? 4,050. So this is sundry expense. So note, we only enter this if they have specified, saying this is for the factory. And if there was no anything concerning the factory, said they only mentioned sundry expenses and they didn't mention if this is for the office or this is for the factory, then would have entered it in the trading profit and loss. But here they've specified there's some for the factory and then there's also some for the office. So we're going to enter that for the factory in here. So how much was our sundry expense? So our sundry expense was our sundry expense for the office was 4,050 kwacha. So it was 4,050 kwacha. 4,050 kwacha. Then we're going to proceed looking for more factory overhead, and the other name for this one is actually factory overheads. So if you see factory overheads, don't be confused. It's one and the same thing. Indirect cost and factory overheads are just the same. So we're from entering sundry, then we're going to look advertising. So even here, if they had mentioned anything linked to the factory, then we would have entered it, but it's just directing advertising. So we know advertising for the trading profit and loss. Then we're going to continue purchase of raw materials. We've already entered this one. Then rent and rates, they have specified again, saying this figure is for the factory and that is for the office, and that's we're only concerned with that of the factory. So we're going to enter the amount which is for the factory, which is 3,050 kwacha. So here we're entering rent and rates. How much was it? So that was 3,050 kwacha. Sorry, that was 3,050 kwacha. Then we're going to this one, the adjustment. Remember, we read some adjustment in this one, and this adjustment was simply directed They said this adjustment is for the office rent, so we didn't touch this one because they specified saying it's for the office rent. But if they mentioned for the factory rent, then we would have made an adjustment there. But it's for the office, so we're going to leave it and we're going to prepare it in the trading profit and loss. So we're going to continue looking for more factory overheads or indirect costs. So from entering rates and rates, so we have plant and machinery, office equipment, office salaries. These are for the office. Then nothing. There is nothing concerning the factory. So when there is nothing concerning the factory, now we're going to look at our depreciation. And you all know that depreciation is simply the loss of value of a fixed asset due to time. Let's say we have a computer. I don't know why I love computers, but here we have a computer. We have a computer. The first time we bought this computer was fresh. It was clean. It was working nicely. It was 100%. Then as time went on, we continue using this computer. It will lose value. The keyboard some keys might stop working. The computer the color, it might gain scratches and all that. So it's reducing in value. That's simply depreciation. So even at this factory, J. Katushi's factory, where they're producing toys, there are machines that he's using to produce these toys. There are machines that he's using. And these machines, as he continues using them, they are losing value. So this is what we call now depreciation. And there was some sort of depreciation concerning. So they said machinery was 1,500. So they have already calculated for us. But as time goes on, we're going to do with questions. I know there are certain questions where the depreciation is kind of confusing, where they say 20% using reducing balance method, and there's already a previous depreciation. And I understand that's kind of confusing. But for this one, it was simply direct. So we're simply just going to enter this depreciation. Again, there will be a separate video. There will be a separate video for calculating depreciation. So please subscribe and like and hit the notification bell, so as when we post a video concerning the same depreciation, you'll be notified, so that you understand the key concept concerning the same depreciation. So here we're going to enter the depreciation concerning the factory, which was the machinery. J. Katushi's machinery was depreciating. So we're going to enter depreciation. And this depreciation is for the machinery. And how much was it? So they told us in our question that depreciation to be charged at 1,500. So already calculated. We're just going to enter it here. Which was 1,500. Then that is concerning this manufacturing. Now what we need is just adding. That's all. Don't be confused. So we've entered everything concerning the factory. Now we're going to add these indirect costs. So when we add our indirect costs, let's start with the one on top. So adding these indirect costs. So we're adding 3,610 plus 4,050 kwacha plus 3,050 kwacha, then plus 1,500. What are we getting? We're getting 12,210. And we're going to enter this figure here smartly. You write 2,200. So 2,210, like so. Then when we reach here, like I mentioned, there is no much of subtracting all that here. Here is simply the issue of adding figures to find the sum. That's why they call it the total sum of the cost of producing an item. That's what we do when we're calculating in a manufacturing account. So we're going to add these two values here. The prime cost plus now the sum of the indirect cost. So when we add this plus 78,325, what are we getting? We're getting 90,535. So I'm simply going to write it down here. 90,000 90,535. So that's our, so in this question, why we've concluded saying this is our production cost or cost of production is that there was no work in progress. So we're going to do a separate video concerning when we have work in progress. So when you have work in progress, it does not end here. When we have work in progress, after adding the prime cost plus the sum of the indirect cost, we now say add the opening stock for the work in progress. Then later, after we add, then we're going to say subtract the value for the work in progress, the closing stock for the work in progress. But here we don't have any work in progress. So if you don't have, please don't stress yourself. You don't have, this is where I've ended. So when we don't have the work in progress, you just end when you add the indirect cost plus the production cost. So meaning our manufacturing cost is this one, or the production cost. So production cost. So meaning not cost, but cost. So meaning this is our production cost. So yeah, this part is this question where they say calculate prepare the manufacturing account for the year. So in the manufacturing account, I repeat for emphasis, in the manufacturing account we calculate the production cost. And sometimes you even calculate the profit on production or cost, the profit on manufacturing. But here, this question was simply production cost. So calculating the production cost of an item. Then this production cost, now we're going to use it in our trading profit and loss to find our net profit or net loss. Then from there, we're going to calculate our balance sheet. So in the manufacturing account, it's separate from the business. It's simply where you produce your goods, you produce. So we're simply here, what we've done, we're simply calculating for the manufacturing, the cost of manufacturing this good. Then we found out, okay, the cost of manufacturing these toys, Jekatushi's toys, was worth 90,535 kwacha. That was the cost of production. Our net profit using the trading profit and loss account for Jekatwishi. So now this is simply the same trading profit and loss, the normal one. Now the only difference with one is that we're going to include that production cost that we found that side. So now let's take our goods, we've produced them, we've produced our laptops, we've produced our toys. Now we've brought them into the business. Now we want to start selling those laptops that we produced in the manufacturing account. That's this trading profit and loss account, but it's just the same. So now the first thing that we're going to enter, just like always, is sales. Now the sales, we're going to get our sales direct from the question, our sales. So here we don't have any sales returns. If we had sales returns, we would have followed the normal procedure of lessening it. That's when we throw it to the last column. But here we don't have any returns inward. So we're going to get our sales. Where is our sales? Our sales is here, which was 97,400. So we're going to put it on the middle column. We're going to put, on the last column. We're going to put it on the last column since we don't have any returns inwards to less it, so we're going to take it directly to the last column. So how much was it? It was 97,400. Then now we're going to proceed. From our sales, what do we enter in a normal trading profit and loss account? It's the opening stock. But here, remember in our question, we had two opening stock. We had raw materials and we also had finished goods. So in the trading profit and loss, we're entering finished goods, the raw materials for the stock for finished goods. That's what we're going to enter in our trading profit and loss. And how much was the figure? So here we're looking for the finished goods, the raw materials for the finished goods, which was inventory finished goods. 6,630. We're going to enter that figure, 6,630 kwacha. Then from there, in normal trading profit and loss, after the opening stock, we add purchases. But since our question does not have purchases, we're going to look for another thing that we enter. And here we're going to enter the production cost. But if we had our purchases, we'll add our purchases plus the production cost. I repeat, if we had the purchases for finished goods, we would have added the purchases for finished goods plus the production cost of the what is the one that we calculated in the manufacturing account. But here we only have what is the production cost that we found. So we're going to enter our production cost. The one that we calculated in the manufacturing account, that's where the difference is. That's where the difference is when we have production cost, when we're calculating the manufacturing account. That's the only difference. And then everything will be just the same as the normal trading profit and loss. So how much was our production cost? So we calculated our production cost to be 90,535. So we're going to add it here. 90,535. That was our production cost. So we're going to add these two. Add our production cost plus our opening inventory for finished goods. How much are we getting? So when we add 6,330 630 plus 90,535. How much are we getting? We're getting 97,165. So this figure, we're going to just normal trading profit and loss. We're going to put it here. So we're going to put it here, which is 97,165. Just normal. Then we know this figure is total stock available. So these things, if you know the basic trading profit and loss, this whole thing is made easy. But I believe in the near future, a video, if you're in grade 10 and you're in grade 8 or something, you want more insight on the trading profit and loss and the balance sheet, a separate video will be done. Total stock available. Total stock available. So this is our total stock available. From the total stock available now, we're going to say less closing stock. Less closing stock. Less closing stock or inventory. This closing stock, again, in here now, we're focusing on the finished, not the raw materials, but the finished goods. So how much was our closing stock for finished goods? So the closing stock for finished goods was 22,245. So we're going to put it here, 22,245, like so. Then from there, we simply less. We less. So when we less, how much are we getting? When we less, so this one minus 22,245. We're getting 74,920. Then now this figure, we're going to throw it now to the last column here, which is 74,920, like so. And this one, the same names. This will be our cost of goods sold. Then we proceed. When we find our cost of goods sold, we know we're going to less with the sales on top. So we're going to less this. So we're going to say the sales was 97,400 minus 74,020. We're getting 22,480 kwacha. So we're going to record it down here. So this figure, which is 22,480, this is our gross profit. So gross profit simply means the profit that we made without adding incomes or lessening of expenses. That's our gross profit. Then from our gross profit now, we're going to just normal. The only difference came in when we added our production cost. So if you have insight on the normal trading profit and loss account, then this manufacturing account as a whole will be made easy for you. The only difference is preparing the production cost. That's all. Then from the production cost now, we're going to go to our question. From the gross profit, sorry. Do we have any incomes in our questions? So we do not have any incomes in this question. You can see no incomes in this question. So we're going to go and write less expenses. Less expenses. Less expenses. And underline this. So what were our expenses in the question? So our expenses, and there's even an adjustment. Like I mentioned, adjustments, they can cause your balance sheet not to balance. So you need to pay particular attention to the adjustments. If you miss it on the adjustments, then your balance sheet will not balance. So our adjustment, there was this adjustment that said office rent prepaid. So when we're entering office rent, we need to remember that there was an adjustment concerning this. We're not just going to enter it directly. So now we're going to look for adjustment. Start from the top again so that you do not miss any expense. So we have motor vehicle expense on first there. So motor vehicle expense, we're going to enter motor. We'll just write expense. So motor expenses. How much was it? So this one has no adjustment. So we're going to bring it on the middle column. If it had an adjustment, we would have taken it to the first column, but it does not have an adjustment. So we're going to enter motor vehicle expense. This was 880 kwacha. So 800. This was 880 kwacha. Then we're going to continue looking for more expenses in our question. So more expenses in our question. We have electricity. Electricity, that was for factory, and there was also for office. So in here we're going to enter for office. For factory, we entered it in the manufacturing account. So in here we're going to enter for the office, which was electricity. How much was it? So electricity was for the office was 745 kwacha. 745 kwacha. Then we continue looking for more expenses. So we have royalties, we entered it that side. Sundry expenses. There's for office and for factory. For factory, we already entered it. So now we're going to enter for the office. Sundry expenses. Sundry expenses. How much was the figure? There's no adjustment, so we're going to bring it on the middle column. How much was it? So this figure was for the office, it was 970. So we're going to enter our 970. More expenses. We had advertising. So advertising, we're going to enter advertising. How much was the figure? Also, advertising will be taken to the middle column because there is no adjustment concerning advertising. So how much was our advertising? Our advertising was 5,844 kwacha. So it was 5,844 kwacha. Am I right? Yes, that was the advertising. More expenses, we look in the question. So the other expense which was there was rent. Now we've reached the part where there was an adjustment concerning rent. So rent, there was an adjustment. So we're going to enter rent. But paying particular attention that there was an adjustment, we're going to write it in the first column. So rent and rates, but I'll write rent only because of time. So rent will be put in the first column. How much was the figure for rent? Because there was an adjustment. So rent's figure was for the office. It was the rent figure for the office was 1000, so it was 1003, like so. So there was an adjustment. What was the adjustment saying concerning rent? So adjustment concerning rent was and office rent prepaid. The last adjustment, C. Office rent was prepaid. So meaning it was paid in advance. I repeat, when something has been prepaid, meaning vanayilipia kudala. So what we do in here, we're going to remove that figure that was already paid for. Then if it was owing, we add it because the business has to pay for it. So now here we're going to say less prepaid because it was paid in advance. So we need to say less prepaid or paid in advance, same words. So less prepaid. How much was the prepaid for rent? So the prepaid for rent was a 70 kwacha. So we're going to write 70 kwacha. Then we're going to less. So when we less this, what are we getting? 1,350 kwacha, 350 minus 70 kwacha. What are we getting? We're getting 1,000. Supposed to get, no, I added, not subtracted. So it's 135 minus 70. So we're getting 1,280 kwacha. So we're going to write our 1,000. Now we're taking it to the middle column, 1,280. Then we proceed. Do you have any other expenses? So other expenses we have. So we have now office equipment and course is not an expense. Office salaries. So the business had to pay its workers. So we have salaries here. We had salaries here. So how much was the salary figure? So salaries, we're going to enter it on the middle column because there's no adjustment attached to it. So how much was it? The office salaries was 8,008. So this was 8,870. Like so. Am I right? Yes, that was the figure. Then we proceed looking for more. For the trade in profit and loss, expenses are there, so you need to look for them until you find them. Oh, don't miss any. That's why I emphasize starting from the top, going down until you check every balance that was brought there, because you might miss one, and if you miss one and you realize while you're writing your balance sheet, then you've messed up your work, because you have to include it for it to have marks, in short. So make sure you start from the top going down so that you do not miss any entry that you have to enter in here. So we're looking for more. So we're from office salaries, we have accounts receivable. So accounts receivables are the same as debtors. Then accounts payable, same as creditors. Then cash at bank, sales, motor vehicle at cost, inventory. So that's it for the expenses. But there is depreciation. So we are having depreciations here. We only entered one, which is adjustment, additional information B, which they said adjustment is to be charged as follows. Machinery 1,500, office equipment that was 300, then motor vehicle 600. So we're going to enter these depreciation. I repeat, they were already calculated for us, so I'm just going to get them as they are, then put them there as an expense. Depreciation, loss of value of a fixed asset. A video will be dropped emphasizing on just these. Firstly, we're going to do adjustments separately, understanding prepaids, accrued, owing, all those on the adjustment. Then from there, now we're going to look at another video. In another video, we're going to handle the issue of the depreciation, because you need to prepare a provision for depreciation account in section A of paper 2 accounts, principles of accounts. So that video again will be dropped. So I repeat, please share, like, and subscribe for more content, so that when we post new content, you are notified. Okay, so the depreciation, we're just going to enter them the way they are because they were already calculated for us. So we're going to say depreciation. Here we're entering for, they told us there was motor vehicle Yeah, there was motor vehicle depreciation and office equipment. So let's start with office equipment. So just say office equipment. Office equipment, how much was it? So this one was a 300, if I'm not mistaken. Yes, it was. Sorry. So it was a 300. Yes, it was a 300. So we enter our 300. Then the other depreciation which was there was the other depreciation which was there was motor vehicles. So we're going to enter motor vehicle here. Motor vehicle. So how much was depreciation on motor vehicle charged? It was 600. I'm going to enter our 600 there. 600. That's all for our depreciation, and that's all for our expenses in the trading profit and loss. So now we are going to add this. So when you've written all your expenses, now you simply add them. Then now you're going to subtract them from the gross profit. So now we're going to add this. Going to add. So we start from the first entry that we entered on expenses, which was 880 plus 745 plus 970 plus 5,844 kwacha plus 1,280 plus 8,870 plus 300 plus 600. What are we getting? We're getting 19,489 kwacha. So like when there are a lot of entries, make at least punch on your calculator twice, because you might make a mistake. Errors happen in accounts. There is another topic, errors in accounts. So errors will happen in accounts. So make sure you punch on your calculator twice to get the accurate balance. So we're going to write this 19,000 here. 19,489 kwacha. Like so. Then when you found this one, remember we said less expenses. So this one has to less the gross profit on top there. Then we're going to say, how much was our gross profit? It was 22,870 minus 19,489. What are we getting? We're getting our net profit as, so our net profit was found to be, 2,991. That was our net profit. So you're going to indicate here, this is my net profit. To the balance sheet of J Katwishi. So this is now where the heart starts beating fast in an exam, am I right? Or when you're writing a test, mid-term, end of term, like, is it good balance? Did I do everything right? So here now we're going to check if our entries and the calculations were done correctly. So in J Katwishi's balance sheet. So in the balance sheet, it's just normal, you people. Don't be even confused that in a manufacturing account you're going to draw up a different balance sheet or a different trading profit and loss. No, it's just the same. So now what we're going to start with is the fixed assets. So we're going to enter fixed assets. There are fixed assets and underline as our heading. Fixed assets. So now we're going to list our fixed assets down here. Fixed assets down here. So I'm going to go and look for our fixed assets. So our fixed assets, starting from the top, I repeat, starting from the top, our fixed assets, we had plant and machinery. So we're going to emphasize plant and machinery. So plant and machinery. plant and machinery. So how much was it at cost? So at cost, the plant and machinery was worth, this was 14,300. So I'm going to enter 14,300. Then here, you, if you are not conversant with a balance sheet, I encourage you to tackle as many questions as possible and just understand the layout in your head so that you have the complete layout in your mind. Because in accounts, even if your account does not balance, as long as the entries were made correctly, you get marks. So that's a good part about accounts. So make as many correct entries as possible, and the only way you can do that is if you practice and practice and practice. So here we're going to enter the depreciation, which we calculated for plant and machinery. So the depreciation which was there for plant and machinery, there was no previous depreciation. That's why we're entering this depreciation that we entered for plant and machinery. So this depreciation we actually calculated here, which was 1,500 for machinery, plant and machinery. Then we're going to write it here, which was 1,500. 1,500. Then we less this 14,000 cost minus the depreciation which was there. So 14,300 minus the depreciation which was 1,500, we're getting 12,800. So we're going to write out 12,800. That was the net book value. So the net book value is the value when you subtract the depreciation and you subtract the depreciation from the cost. So meaning this is the value of that fixed asset as at 31st December 2017. That was the value of this fixed asset. Then we proceed looking for more fixed assets in our question. So we had office equipment. I've just remembered we had office equipment. How much was it at cost? So office equipment at cost was worth, going to look for office equipment. So office equipment at cost was 4,100. So we're going to enter 4,100. So it was 4,100. Then what was the depreciation for the office equipment? So office equipment depreciation, we were given 300. So we're going to enter the 300 that we were given, 300. Then we're going to less. We're going to remove this 300, the depreciation, from the cost to find the worth of that good as at that moment. So when we less, what are we getting? So 4,100 minus 300. How much are we getting? We're getting 3,800. So we're going to enter our 3,800 here. Then we're going to continue looking for more fixed assets. We had fixed assets. We had about 3. So the other fixed asset which we have here is motor vehicles. So we're going to enter our motor vehicles there. Then how much was it at cost? So at cost, the motor vehicle was worth this was 3,100. So we're going to enter 3,100. 3,100. Then what was the depreciation for the motor vehicle? So the motor vehicle was 600. That was the depreciation. So we're going to less again to find the cost, the net book value of this asset here. So when we less, how much are we getting? We say 3,100 minus 600. How much are we getting? We're getting this is 2,500. Then these are only fixed assets that we had. We only had 3 fixed assets, but if we had more, we'd have continued doing the same. So if we do not have any depreciation, just write the same cost, the value of the figure for the cost to the net book value. But because we have depreciation, that's why we've included the depreciation there, and then we've subtracted to find the net book value. So now we're going to add these totals here. So we're going to add, boom, here, boom. Then now we're going to add. So when we add this side, how much are we getting? The first column for the cost. So first column for the cost plus we're getting 21,500. So we're going to enter 21,500 here, 21,500. Then the middle column, we had 1,500 plus 300 plus 600. How much are we getting? We're getting 2,400. 2,400. Then the last column now, this one is very important. I actually shouldn't have reached all this. Supposed to end here when underlining, because this figure will be needed. Figure that we're going to find here. So this figure, so we're going to add 12,800 plus 3,800 plus 2,500. We're getting 19,100. So we're going to enter our 19,100 there. 19,100. Then now we're going to go to current assets, just like a normal trading, just like the normal balance sheet. Normal balance sheet, just follow. So you need to have this layout in your head, so that as you go, you're writing with confidence. So the only way you can know this layout is by practicing more questions, and you get a hang of it. So our current assets, are simply assets that can be easily changed to monetary form. So our current assets, we have, starting from the top, current assets. We have accounts receivables, which are debtors. So we're going to enter our debtors. Enter debtors. So the debtors value, so it's accounts receivables, but just written debtors. How much was it? So we're going to write it on the middle column. So the figure for debtors was, accounts receivable was 17,100. So we're going to enter 17,100. Then from there, we're going to look for more current assets. Now question. So current assets, from debtors, we had cash at bank. So we can enter, first let's enter our stock. So closing stock is what we enter in the balance sheet. So closing stock, now remember we have two stocks, closing stock. We had finished goods, finished G, and we also had stock for raw materials. So we enter both the stock. We don't only enter one, but enter both the closing stock. So we had finishing goods, closing stock, and we also had raw materials, closing stock. You enter both. So how much was the closing stock for finished goods? So the closing stock for finished goods was, here was it? It was 22,000. So it was 22,245. Yes. Then for raw materials, how much was it? So for raw materials, the closing stock was 7,000. So it was 7,255. So 7,255. Am I right? Yes. So that was the closing stock for raw materials and finished goods. So you enter both. So if we had work in progress, we would have included the closing stock for work in progress, not the opening stock. No, the closing stock. Then the other thing that we have in here, we have cash at hand. Is it cash at bank or cash at hand? So it was cash at bank. So it was cash at bank. So cash at bank. How much was it? So cash at bank, we had money at the bank as our current asset. So what was the money that we had in the bank? So we had 8,000. So if they wrote this on the credit side, then we would have treated it as a current liability, but it's on the debit side, meaning it's our money. But if it was on the credit side, we would have treated it as a current liability, which is a bank overdraft, but it's on the debit side, so we are safe. So how much is the figure? That was it was 8,000. 71 kwacha. Am I right? It was 71 kwacha. 71 kwacha. 8,007. Yes, that was the figure. Yes, then now we proceed. Do you have any other current? So the issue of adjustments also come in place. So for every adjustment that they give you additional information, it has to be entered twice. It's either it's entered in the in the manufacturing account, then and the balance sheet, or it's entered in the trading profit account and the balance sheet. So you always have to enter it twice. Just like the depreciation, we entered these depreciations in the manufacturing account, then also they have appeared in the in the balance sheet. Now, even these unpaid accrued, they are also considered to be they should be entered twice, both in their respectable where they were supposed to be entered, and also in the balance sheet. So when something has been paid in advance, meaning it's our money, it hasn't yet been worked on, but it's our money, so meaning it's a current asset to us. But when we are owing tinankongole, meaning it's a current liability. I repeat, unpaid advance is a current asset. Then owing or accrued is a current liability. So now we're going to look for royalties unpaid. That will be a current liability. Then office salaries prepaid. So we're going to write prepaid here. Prepaid. How much was it? So prepaid was 70 kwacha. We're going to enter our 70 kwacha here. Then now we're going to add all our current assets. So we add our current assets. So we're going to add our current assets. 17,100 plus 22 plus 22 245 plus 7255 plus 801 plus 17 kwacha. We're getting 54,741. So we're going to write it on the middle column. Going to bring it down here, which was 54,741. Yeah, I don't even know what I was writing there. So 7. So it's 54,741. Wrong. The computer started tripping. So it was 54,741, like so. Yes. Then now we're going to go to our current liabilities. So current liability, we're going to say less current liabilities. Liabilities and underline. So our current liabilities, what are our current liabilities? Creditors. Going to include our creditors here. Right, creditors, which is same as accounts payables. So our creditors, how much was our creditors value? So our creditors value was 4,700. So it was 4,700. Then we're going to continue. We're going to put our owing here, or unpaid. Our royalties unpaid. So you see, it's just same concept. So royalties unpaid, how much was it? It was 2,000. So it was 2,075, 275 kwacha, like so. Then we're going to add this. So when we add this, how much are we getting? 4,700 plus 275. We're getting 4,975. So we're getting 4,975. Then from there, we're going to less. Going to less this. How much are we getting? So when we less minus 49,750. How much are we getting? We're getting this figure here. Going to write it now on the middle column. So this is our working capital, which was 49,766. Then now from here we're going to, so this was our, so you can write it here. Say this value that we found is our working capital. Working capital. Working capital. Then now we're going to add. So here we don't subtract the fixed assets and the current asset. No, we don't subtract. We're going to add them. So we're going to say 19,100 plus 49,766. So this is the value we're going to look for. So when you're writing your what's this, your PC is about to shut down. So we're going to write this figure here, which was 68,866. Finish this up. Power left when we found our net assets. Yes, after working capital, then we added the working capital plus the fixed assets there. Then we found 68,866 kwacha. So now here, this we are done with it. So here we've closed this part. Now we go and finish this thing up. We check if it will actually balance. So now we're going to come in here. So we use this part of the answer. We're going to write our answer here. So now we're going to say financed by. This part is always scary when you're writing your accounts test. Like, am I going to find the same figure, or I'm going to find something different? So okay, that financed by, so our business, or J Katwishi's business, was financed by what? So J Katwishi's business was actually financed by capital. How much was the capital value? So we're going to look for capital value in the question. So the capital value was 77,975. So didn't quite see it. 77,975. That was the capital value for J Katwishi. Then from there now we're going to, this guy's business was also financed by net profit, the one that we found. So it was financed by net profit. So what was the net profit figure that we found? So the net profit that we found here was 2,991 kwacha. So we're going to write it here. 2,991 kwacha. Then we're simply going to add. Going to add these two. So what are we getting when you add? So when you add 77,975 plus 29,991. What are we getting? We're getting 80. So we're going to write this thing down. Going to write it here. We're getting 80,966 kwacha, like so. Then from there now we're going to say less drawings. Less drawings. How much was the drawings for J Katwishi? So the drawings figure was drawings. Sorry, why am I even going outside? So the drawings figure for J Katwishi was 12,100. So we're going to write it 12,100. Yeah, 12,100. Yes, 12,100. Like so. Then when we bring our drawings figure here, we're going to less. Now this is the part where we're going to find out if it's going to balance or not. So this value, so let me just repunch it, 80,009 minus, so minus 12,100. What are we getting? Wow. So there is a figure. The figure that we found here, we're going to write it down now. So this figure was what? What was this figure? So this is 68,866. This is our capital employed. Capital employed. Capital employed. So you see, our balance sheet has actually balanced. So these are the procedures that one needs to follow in order for the manufacturing account to balance. But in the future, we'll handle more complex questions concerning the issue of the adjustments so that we get to understand and we get to practice more. So this YouTube channel, you guys, you can, for more content, please like, share, subscribe, and click the notification bell that whenever we post new content, you are notified and you do not miss out on interesting concepts that will be shared, not actually taught because I'm not a teacher, but will be shared on this YouTube channel. So next time we're going to do depreciation, how to handle reducing balance method or diminishing balance method, or using straight line method. And then also some adjustments when we're talking about prepaid, paid in advance, owing, accrued. All those issues will be handled here on this YouTube channel. And then for you guys who would want a soft copy, I may say yes, a soft copy, some sort of a book I prepared concerning just this question, not accounts as a whole, but just this question, the answers for what we did here, everything we've done here, the manufacturing account, the trading profit and loss, and the balance sheet. There is a soft copy that I made, so you can simply inbox me on WhatsApp. I'll drop my line down there. You inbox me, then I'll share the same the book or the answers for this same question, the 2019 manufacturing account questions. So with the question and the answer, so that you try and do it by yourself, then you'll be checking why you're erring, so that we are helping each other. So it's for free, no payments whatsoever. So just inbox me, the line will be down there. You just inbox me on WhatsApp, then I'll gladly share the answers for this question, what we've done here. So it has balanced 68,866 kwacha. Also here 68,866 kwacha. So thank you for watching. I hope I see you next time, same place here. Let's discuss ECZ, commerce, and accounts.